The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
I feel like when you're telling them the numbers, like, hey, you're making 80,000, like that is awesome. Like that is a good income for back in the day. Very sorry, like that's not going to allow you to buy something today by yourself. Where back in the day, like that was fine. If you were making 60 to 80,000, you're going to get to buy a place by yourself. That doesn't exist now.
Welcome to the Canadian Mortgage Show, episode 55. Alex Pang here alongside my co-host in crime, Alex Shanks. Alex, how are you doing?
I'm doing pretty good there, man. I was just looking at my background. So it's always so weird. I mean, we usually record at night. Your background looks identical. Mine just looks, there's more light in it. So it looks a tiny bit different. I was just like, I need to clean some stuff up back there.
Yeah, we've been talking about how your background needs to. It looks pretty good. It's what you see from those stock photos that you put on a Zoom background. Whereas I actually have a physical background, and I'm in the corner of a certain room. I'm like, okay, I got to put some side pictures and all that stuff. And we talked about that in the beginning. Wow. But yeah, it's been a busy month for.
You got you got another kid that has a driver's license now in your house, right?
Correct. Yes. My youngest son, Aiden, he turned 16 yesterday. Happy birthday, Aiden. Probably not listening to this pod, but at the same time, he went out to get his L yesterday. So folks, the rest of outside of BC, we have this driver licensing system where new drivers, they get an L as a learner, and they can do their driver exam 1 year from the date. I guess the idea is to, ease new drivers in because statistics show that the higher percentage of car accidents are the younger demographic. So agree with it or not, that's the system that we live in. But yeah, he got his L, and then
you let him drive. We took him. Did you let him drive right from the place?
Well, no, I did the teaching for my older son. So I kind of fluffed it off on my wife now. I'm like, hey, I already took care of Jordan. It's your turn now. So after dinner, they actually went out in the parking lot yesterday, and so it's her responsibility now. So, honey, your turn.
Let's see. When I did mine, my dad had a diesel truck. It was manual and stuff, and so I said, as soon as I pass, I get to drive home. And so, I mean, I drove home in a standard, and that was it was interesting, but I made it happen.
Wow, I can hear the clutch like grinding the gears and the head bob like.
Yeah. I think they had a surprise birthday actually, and there was a bunch of people there, and I think I came up and I stalled going into the driveway because I was like, well, there's all these people here.
Oh gosh. Yeah, I remember the times now. I don't even know if cars have manual transmission anymore. I think they've slowly phased it out, and some cars have Tiptronic, and it's just more the higher ends. Yeah. The exotics, the luxury sports cars, all that stuff, because they want to keep it pure and stuff.
I honestly think it'd be a better way. It keeps you more aware of what you're doing while you're driving. You can't really be thinking of other stuffs. My first car had it, and my parents hey, you need to be able to drive with this. There was one hill in my little town that I stayed away with because I was too scared of having to switch the foot on, and so I would stay away from it. Then I got better. I'll just use the e-brake, and then I'll floor it. And so I haven't driven a standard in a while.
Yeah, I had a couple standards back in when I was younger. My first car was automatic because my parents bought me the car, and I'm they wouldn't get me standard. So my second car was a standard, and yeah, man, it was almost like a rite of passage as a young teenage boy. Yes, you have your driver's license, but the next level of coolness means you're driving the stick. Yeah. And it's just it's just practice. It's just kind of getting over it. It's just a matter of putting the gas and slowly releasing the clutch, so there's a grabbing point, and then the car moves forward and all that stuff. So
I got my class 1 ticket for driving big trucks, and I did that. I had been looking at becoming a lineman back in the day, and I mean that for 18 gears on that thing. And that's like, I was fine with doing the gearing, and that's like, especially when you're downshifting, you have to hit the right RPMs or it won't go. And I remember going up a hill once with my instructor. I'm like, I don't remember what gear I'm in. Am I in 12? Am I in 14? And that is it. Yeah, definitely. I have really good respect for the people that drive. Definitely the Coquihalla logging trucks. Like it is really dangerous. Like a truck can run away on you. Like if you're in too high of a gear, you can't downshift. And if you got too much weight, you're not using the brakes.
Yeah, and that's why there's all these runaway lanes when you're going down. For those of you not in BC, we have this long stretch of highway called the Coquihalla from Vancouver to, like, I guess Kelowna, so to speak. And along the way, you go uphill, then you go downhill, and the temperature can go from 15 degrees to 30, back down to 15 in your 3-hour trip. And when I was younger, I was like, what are these dirt paths that go up the mountain? And then that's when I learned about the runaway. I'm like, oh, this is to prevent you from crashing and causing mass casualty event.
Yeah, exactly.
So,
Yeah, you put a bunch of gravel, like it's all fluffy there, so that when you hit it, it's to slow down the truck and everything.
yeah, absolutely. Well, hey, we got a big show. Do you want to lead us off?
I mean, this is the massive news article, which we're going to post out there too for that news clip. Well, everyone knows the Bank of Canada at this time has cut the key overnight lending rate by 0.25. Now, does not mean that interest rates are at 2.5%. People, please stop calling me saying I want an interest rate at 2.5%. That is what the Bank of Canada lends out to the other banks. Me, you, and Alex, we don't get that. That's not what we get to borrow at. The banks then have their prime rate, which went from 4.95 down to 4.7. So, hey, variable rates have decreased. If you have personal line of credit, anything that way, you've seen a decrease, but you're not going to get 2.5% interest rates.
Yeah, yeah. I mean, just the backdrop behind it. I mean, it was an overwhelming, unanimous kind of thing. It was market odds was like at one point 80 to 90%, and the bank cited various signs of economic weakness, but they remain pretty tight-lipped on if there's any future cuts. But the market odds, it's up to about 48% for another cut October 29th. Now, history has shown that when they make a cut, it's not just a one and done. It usually follows a trend. Now, they've paused it for 6 months from March, and it looks like it seems like we're kind of waiting for the US to fall in line, and it seems like we are returning to the US.
Fed cut today, did they not?
Yes, the Fed, I believe they cut yesterday, the same day as Canada. And I mean, their trajectory is a more aggressive rate cut, but they haven't fallen in line with us. Like, we're kind of slowly returning to kind of being on par with them. But like Alex said earlier, this is a friendly reminder. Every time there's a rate cut, we have to explain this out to you. What this means to you if you're on adjustable rate. So what is adjustable rate is? So if you're with a lender like Scotiabank, National Bank, or any of these mortgage finance companies, or we call them monolines, it is a true floating rate. So your payment will go down around $13 for every 100,000 owed. Okay. Now, if you're on a fixed payment variable, so all the other lenders like RBC, BMO, TD, CIBC, and the credit unions, your payment will stay the same. Just more of it now will go towards the principal versus the interest. Another big question. They'll probably grind your gears. Does this affect fixed rates, Alex?
It does not. It does not. I mean, we made a podcast episode about that, reminding people. I even did Instagram posts talking about it before. But again, I understand where people are getting their information from the news. It does a horrible job. And I will say this, realtors are also bad at posting interest rates drop 2.5%. I mean, why would I not call my mortgage broker and say, hey, is my interest rate going to drop by that amount? And that's where fixed rates, they're always based on the bond yields. This had already been priced in, and we actually had some rate specials that the bank took on too much business, and they had to stop the rate special before it actually was meant to go. And that's where some clients that came to us last week were getting like 3.99 for a conventional mortgage, 3.69 on an insured mortgage. They're now at 4%. they're actually higher if you came to us and got a mortgage today. And that's where, yes, to me, fixed and variable, it's more coming in line. And I know me and you were talking, Alex, offline of, is it now the time to look at, well, we have people that took variable rate mortgages with the plan to lock in. And that's because you get to look at the bond yields. If you took a fixed rate mortgage 6 months ago, you're at like 4.5%. There's a chance if you lock in now, you might be at 4% or even lower. Now, that's where it's really starting to gauge, well, how much lower do we think it could go? And I mean, the BMO Bank of Canada said, or like BMO thinks that the Bank of Canada is going to make 3 more interest rates cuts before spring of 2026. Now, if you go back even 3 weeks ago, Alex and I both agreed that, hey, there was going to be no more rate cuts till maybe the end of this year. But that was before the jobs report and the inflation report. And that's what led the Bank of Canada to be cutting here already so soon. And that's where, to me, like we just need to keep seeing the data. I don't think it's the time to lock in yet into a variable rate mortgage, but I am tracking the bonds way more frequently right now because I can tell my clients, hey, reach out to Scotia, reach out to TD, ask them what it would be to lock into a fixed rate mortgage today so that we can start to get a gauge of, hey, what are they offering right now?
Yeah. I actually messaged Alex this morning about something my client shared with me because I told him like, hey, it just makes sense to renew with your lender because you're not taking any new money, all that stuff. Renewals, banks are pretty aggressive at renewals, and he just showed me, hey, what do you think? Which one should I take? And I looked at him like, whoa, they're all in the threes, the fixes. And Alex and I were having this conversation. I'm like, I wonder if other lenders are as aggressive as this bank offering renewals. Don't know yet. This is the first I've caught wind of this kind of aggressive rates. So this kind of sparked our conversation. And we've been saying long ago that the best time to lock in is around 3 to 6 months before Bank of Canada's finished cutting the variable rates, because the bond yields are kind of a leading indicator around 3 to 6 months. So Alex said BMO's predicting 3 more rate cuts, but that includes yesterday. So that would be essentially two more. So there is a growing sentiment that either October or December is 1 more cut, and then we could be another cut in leading into spring. So yeah, I don't know if I'm ready yet to lock into fixed if I'm variable yet. Maybe if there's 1 more cut.
I think if you get a 3.5 number, I think if you're seeing a 3.5 on the fixed side, I would be like, you know what? I feel like that the reward of locking in, and yes, what if they cut 2 more times, 3 more times? Well, you're getting close to that. But like, I always like to play the game of what's my risk reward? My reward is, hey, if I lock in now, I'm saving X amount money today. Damn, my risk was, hey, it actually went down lower and I could have saved even more. But the risk on the upside is, well, what if they don't cut rates at all? And now baby bonds have gone up and hey, now I'm locking in at 4% again. And that's just where I had clients that 3 months ago, we did this very specific strategy. They want it fixed. Like that's what they wanted. There was no question. We had them take a variable at first because they were paying a premium. If they took a fixed rate today, they would have been at 4.5%. Well, they waited not even a week later, bonds had decreased, had them reach out to that bank directly, and they got a fixed rate at 4%. We saved them 0.5% instantly. And that's just where, yes, we all want the lower interest rate up front, but sometimes you're going to take a variable, pay a premium for a month or two to actually get a lower interest rate in the long run.
Yeah. So what Alex and I are basically saying, it's getting close, because if we're seeing some renewal rates in the 3.7 to 3.9, I'm not going to blame you if you locked in now. That's actually a pretty good thing. If I was in that situation, I would have a really hard time to hold out for a little bit more, because we've been kind of promoting to hang on for this day, and it looks like this day is coming pretty soon. Like if it's not now or a little bit more. So trying to time it perfectly. It's not an exact science, obviously. Now, if you choose to lock in now in the threes, I'd be like, hey, you're pretty golden, because my goodness, 3 years ago when rates were at 6.5, we were like, we hope for the day it comes back to normal, right? We were all like, oh my goodness, we are in Siberia here. Like, well, the market is frozen, nothing's happening.
And I believe like 4% is honestly a good area for rates. And if we're below that, like yes, maybe we go down to 3.5, sit there for a while. We go to 4.5. Like I think that to me is where the healthy market is.
Yeah, we are definitely in the range of where the neutral range is. Now, the what BMO thinks is like about if there's another 0.5% in cut, one or two more, we are in the lower end of what the Bank of Canada deems as the neutral range. So I'm not telling people to, if you're a variable to lock in now, but the window is opening up for you. It could be now, or you can hold off to the next cut, which is either October or December. But that would be the time where, like, let's have that discussion where we did preface this is like 6 months, a year ago, year and a half ago. Well, that day has come, folks. We don't have a crystal ball, but it's coming to fruition. So yeah, that's kind of the talk now. What Alex was mentioning earlier about inflation, and unemployment stuff. Well, inflation did tick up to 1.9% in August, but it was short of economist expectations of 2%. Now, in July, it was 1.7%, but that was because of lower gas prices. So the fact that even though inflation did go up, it went up less than expected, which kind of added data to the Bank of Canada cutting rates.
Exactly. That just it leads them to be like, hey, we're in the range. And yes, like they're gonna have room to play. Obviously, they want to be below that 2%. Again, depending on what happens with tariffs, everything else, like this is one that they're watching, is if that starts to go too high, like they will have to. But then they also have the leading force of unemployment rises to 7.1. And so they need to cut the rates because they need to give businesses a better opportunity to obviously get that unemployment number down. And so that's where like there's two sides to the story this way. It's like, hey, yes, inflation, I could see it increasing at some point here. I would say around December, that number is going to be above 2% is my guess. Again, depending on what happens with the new carbon pricing from the liberals on the fuel price, that's going to bump the inflation up there. We'll start to see rent, I think, should be dropping ideally here because again, rent prices are dropping across the board, interest rates going down. And so that's where, as long as we could stay under 2%, it's just going to give the bank more ammunition to keep cutting.
Yeah, absolutely. So if you guys are looking on the YouTube side here in terms of unemployment, it looks like Alberta here has seen the biggest increase. They're at 8.4%, and it's the highest since 2017, excluding the COVID years. Now, Ontario at 7.7, BC at 6.2, the major centers as well. So
Yeah.
yeah,
Then you go in
overall,
Toronto, like Toronto's unemployment rate is near 10% among the highest across there. And then Brampton, Mississauga are even higher, which is like,
yeah.
those ones scare the shit out of me because that is where the biggest pre-sales and some of the like scariest real estate stuff is.
Yeah, you'll see this big graph from Better Dwelling that we'll throw on the YouTube side. The highest unemployment is in the GTA area. So it's Windsor, Brampton, Mississauga, and Toronto next up. And, surprise, surprise, Nanaimo is like number 5 on the top unemployment list. What's the biggest industry in Nanaimo, Alex? It's near your neck of the woods.
I mean, I couldn't say what their specific like industry. I mean, I would again, so the way I take this chart is these are all places that have had they had a lot of run up in like real estate prices. And I've seen the most softening. Like where I'm at, the prices are only going up. Nanaimo is in a different area. You saw a lot of people that bought places, tried to fix them up. They're selling them for losses and stuff. And that's kind of the same in the Brampton area as well. And that's where these people over leverage themselves. And now if they lose their job, they're really screwed.
Yeah, yeah. I mean, even on this list here, in other areas, Guelph, Oshawa, Brantford, Markham, Vaughan, Hamilton, it's basically all of the GTA Golden Horseshoe area. Now, sprinkled in here is, Kamloops, surprisingly. Edmonton is up there as well, Calgary and Abbotsford going on. So, yeah, parts of BC, unemployment across the country is going up there if you break it down by the city.
Yeah.
So, we've always long talked about how unaffordable Vancouver and Toronto is. But here's a crazy stat. Um, yes, we are the most, Vancouver, Toronto being the least affordable, but a worker needs to make nearly 38 bucks an hour to afford a one bedroom unit in the lower mainland and Toronto. Not even lower mainland, Vancouver and Toronto. $38 an hour. I'm like,
Was that like, is that affording, like, is that as a mortgage or is that rent? Like, let's go.
it's probably rent. Yeah, 38. Yeah.
That's a $80,000 income. I mean, you're qualifying for at maximum of 400K mortgage. That's if you're getting a mortgage. Then yes, if you have a bigger down payment. So I mean, maybe that's maybe rent and a price, but that's 500.
Yeah.
I'll even find.
Yeah. So I mean, 38 bucks an hour, 80,000 a year. You're talking like management, entry level management position kind of thing.
And yes, you can job at Tim Hortons for 38 bucks an hour.
Yeah. Yeah. Or realistically, what this means is two people making minimum wage living in a one bedroom apartment. That's the more realistic thing. That's what's happening is like, yeah, like a single income, unless you are earning more as as an individual, is hard as a single income. That's for sure.
Well, that's the thing I found. That's what I really have found when I talk to people nowadays. It's like, especially they're single, it's just, I feel like when you're telling them the numbers, like, hey, you're making 80,000, like that is awesome. Like that is a good income for back in the day. Very sorry, like that's not going to allow you to buy something today by yourself. Where back in the day, like that was fine. If you were making 60 to 80,000, you're going to get to buy a place by yourself. That doesn't exist now.
Now, yeah, essentially, it's almost like your partner needs to also make 60 to 80, have a 150 combined income. I'm like, okay, that might give you some choices now. Now you can buy a 2-bedroom condo or a townhouse out in the valley or out in the suburbs, something like that, and you would need help from mom and dad kind of deal. So yeah, this is the depressing show, folks, and we're not here to poo-poo everything, but we're just here to talk about it and what's really going on out there.
And again, like there's ways to make this happen. I sit down and talk with people like, hey, why don't buy a condo like by yourself? Maybe see if you have a friend, buy a house together, do some work on it. And I know people have done that. They've built equity. You then get to sell that place down the way, and now you guys both might be able to go buy yourself something. Maybe you now have a couple. Like there's it's harder now than back when, even when I was younger, it was easier for me to get a home than it is now. Same thing when our parents were younger, it was cheaper. I do think today is easier to make money than any other time in history. I think you could go, and if you really want to put effort into it, it will be easier to make money than it was 15 years ago. But it takes time and effort. It's consistency. You're not just going to go and knock on 5 doors to try and power wash a house and be like, oh, I didn't make any money today. It's like, no, you got to knock on 100 different doors. Then maybe you get 5 people that say yes to you.
Yeah. And at the same time, the younger kids out there, when my kids said to me, oh, I want to be a YouTuber because so-and-so gets 1 million views a month and they're making $12 million a year. I'm like, that's great for them.
Yeah.
Not everyone's going to do it. If everyone's like, it's just like any TV show. Not every show is going to hit a home run and win awards. And there are a lot of shows that come on and it falls flat on their face and they get canceled after a few episodes or canceled after a season, stuff like that. And especially being a YouTuber, for those being social influencers and stuff, you need to have a personality, and you need to like, just because you do all the things, it doesn't guarantee you anything. So yeah, that's one of those things. It's not easy to earn money, but for those who can adapt and can find a niche, there's opportunity. That's for sure. You have to be innovative.
There's just more opportunity now, and the opportunity is going to slowly go away, especially on the online market as AI comes in more. Where I know right now, if I was not doing, I'll give people a business model today. This is a hot take for someone. If I wasn't doing mortgages today, I would go around and help people set up the right business structure of how to intake clients. I think businesses like have the worst streamlined process, majority of them. I would go in, help people set up their business, how to take calendar invites, how to follow up with clients. Like in my area, like car dealerships, I've bought in 4 cars. I've never got one single phone call from them to be like, hey, how's your car doing? Do you need to come in for maintenance? Like, I would do that, and you can run that with AI. And I would say that would be a 7-figure business within 2 years if you put time into it.
Absolutely, absolutely. Um, Something that is probably not affecting, well, not only it's affecting Canada, but probably more of the G7 nations is our fertility rate.
Uh,
Um, we're at an all-time low of 1.3, and it's below the replacement level of 2.1. So, I mean, not even during the Great Depression did we fall this low. I mean, it doesn't take a genius to say that this is a direct result of the high cost of living in Canada. And I'm sure this is not limited to just Canada. It's a lot of the developed nations as well, like
well, this is
fertility
why
rates being
it's so
all-time
hard.
lows.
It's so hard to, for one, even just live on your own, and then if you bring a kid into the house, how do you even survive? In some cases, is what a lot of people are thinking. And
Yeah.
I know a lot of people have gone through like issues with getting pregnant, like they've wanted to. The cost to even do it now, like if you have to get IVF, anything that way, or if you wanted to adopt, I mean, you're talking at minimum $60,000 just to look at that stuff, which again, someone doesn't even have that. And that's where it's so hard for issues of just buying your own. You don't want to have a kid because you don't have the money. And some people have issues with even getting pregnant nowadays.
Yeah, absolutely. And plus, I'm talking to more and more clients who don't want to have kids because they like their lifestyle and they know the cost of raising a kid, and they don't. Yeah, I mean
I
you know,
think what was the term before? I think you get
yeah,
$1 million a kid or something. Is that what
something
those?
like that. Yeah, yeah, between giving birth and until they're 18 or something like that. I'm like, yeah, I believe it. If you talk about just the financial, the $1 million, but man, sure, it adds a lot of gray hair and stress in your life, right? I mean, of course, having kids is a joy and everything, and I'm not poo-pooing that because we're both family men. But yeah, it's not as easy as people think, right? Because your life does change and all that. So um, yeah.
Yeah, and then I mean, so this is per stats Canada's households owe more than what they earn. Now we've been talking about this, the visa debt, and everything, and for quarter two, the debt to income ratios are 174%. I mean, it's only up 1.1, but that means people have a debt of 174. They make 100,000, their debt is actually 174. And that's just like it's just crazy that way. And then we know that mortgages are way higher. Like, I mean, 10 years ago, my mortgage was lower and it's now higher. Um, and the income is my mortgage is higher than my income, but I also have other assets that I could sell off where people are just so over leveraged on homes that they shouldn't be. And the consumer debt out there is just it's bonkers sometimes.
Yeah. So, talking about mortgages being high, I mean, it doesn't take a genius to say that, real estate prices are the highest in Ontario and BC. So, of course, mortgage amounts are going to be higher in Ontario, BC. And it's because of this kind of slow reckoning we're dealing with in the financial space. Uh, we've seen a larger rise in delinquency rates. Now, Ontario is up 40% in delinquency, and BC is up 20%. So, if you're looking on the YouTube side here, yeah, it's almost a symptom of the whole, I guess, the mega house thing in the GTA and the Lower Mainland. People taking on more debt, getting the mega houses, um, during COVID and all that stuff. And now that looks like the cards are collapsing.
Yeah.
People are
But I mean, in a
things
grand
are
scheme
things are
people, like this, like 40% and 20% sounds horrible, but we are talking about like our delinquency rates in Canada as a whole is like it's so low. And even if we go back, it's lower still than 2017 and stuff. Especially if you compare to the US, their average delinquency rate is like 5%. We're usually below 1%. And that's where, yes, it's going up. So that 40% sounds like a whoa, 40% delinquency. That's like going from like point 0.1 to 0.14. It's not it is a higher number than normal, but it's not like crazy numbers out there.
yeah. I mean, yeah, it is higher, but yeah, not like how it is in the States. You mentioned falling rents before. Do you want to touch on that?
And I mean, this one, again, this is why I always tell people you do not base your investment property on the highest rent that's been getting. You don't want to go back and say, oh, I was getting $2,100 for rent. You want to go back. What did it look like 5 years ago, 4 years ago? And I try and take COVID, strip it out of it because we know that crisis went crazy there. I want to know what was that average. And so the national average rent all across Canada is down 2.3, and the average rent is 2,137. The biggest drops are Vancouver and Calgary, and I know many investors are definitely getting hammered in Calgary. They thought, oh, I'm going to get X amount rent, and even for CMHC financing, that's what they were basing all their financing on, was these higher rents, and now those are starting to tumble. And when you're redoing your financing, depending where you are in your draws, people are losing. They're not going to get the same financing as they were actually approved for at first. And that's where
Yeah.
you can't, this is the same as investing. I'm not going to say that I'm going to get a guaranteed rate of return of 10%. Yes, stretch it over 100 years. That's what the investment says as the S&P. I'm going back to like a 10-year window. What's the last 10 years been? Okay, it's 4%. I'm going to more use that. And that's where when I sit with people that want to buy investment properties, like I get them to tell me what they think the rent's going to be first, so that I can gauge like, hey, are they in the right spot, or no, they think that rents are overinflated.
Yeah, I think this is a big symptom of also oversupply right now. Calgary, the most they've been, they're kind of in the overbuilding phase because it's easy for them to build. Um, Geographically, it's flat land and they just build out like a ring. Whereas in Vancouver, geographically, we're saddled in with water and we can only build east or build up. And with Vancouver, we all know it's those dock rate condos in the sky. No one's buying them, and there's a lot. And hey, we talked about more supply means it quenches demand a little bit, and prices come down. So yes, good news for renters, not so good for landlords. So if you are renting out there, there is a lot of choice out there, and you can get a better deal today on your rent than man during the peak. During the peak, it was like you were probably getting something over asking, and now
Oh,
it's like you have choice now.
yeah, which is nice. And that's everything comes down to an equilibrium. Yes, stuff was crazy high. It all starts to come down at some time. Like we're never
Yes.
going to stay that high forever.
Alex is a hand talker, folks. He just knocked his mic over.
I was looking at my social media video though yesterday. I'm like, man, I use my hands for everything, and I'm a hand talker for sure.
It's all good. It's all good. Now, speaking of CMHC here, the annual pace of housing starts dropped 16% in August versus July, falling to 245,800 units. And I believe in July, they were at, what was it, 274. Is that correct? I think we mentioned that stat.
Yeah,
I mean, there's not even close to that 500,000 election promise from Carney and the Liberals. So
yeah, and again, those are starts and everything, and and now this is where he's come in with his massive plan of saying that Build Canada, they're going to deliver 4,000 housing units on federal land with projects in Dartmouth, Ottawa, Toronto, Winnipeg, and Edmonton starting next year. And they're doing this by giving $13 billion for a new agency that's going to build affordable homes with developers. And these are mostly all going to be modulars on public land. Now, the amount that cost, if everyone does the math here, if you get $13 billion to make 4,000 homes, that's $3.2 million per home. That is not what a modular home costs. Like even if you bought one today, it could cost like 500,000 for a really nice one. So where's all the other money going? Like that's what I would like to know. Is like, we're going to only do 4,000 here and we're giving $13 billion. Well, why don't you just give each municipality $1 billion and they can go buy housing?
yeah, I mean, to be fair, lost in all this like rise is that they do hope to scale it to 45,000 homes, which will means it'll bring down the average unit per door to 289,000. Now, 4,000 is a long way to 45,000. Now, I'm interested to see, are they going to get to this 45,000? And it's essentially you're going to own nothing and be happy. Like
And
you're just essentially going to rent from the government.
are these just going to be rentals? Are they going to be for sale? And like, this is where, like, if you go back, especially in the Winnipeg area, like after World War II, they did crazy amount of building houses for all the people that came back from the war. And they did them like those box styles, and the government helped fund those for the builders. Like, why are we not going back and doing that? For one, let's bring our labor force in. Let's bring all those people that don't have jobs. And we all know, and this has been talked about, we can put on our tinfoil hats, is yes, Mark Carney, his company does own different shares in modular homes. So is money going there? I don't believe it. I think the government's trying to solve a problem, and modular homes are a cheaper way to do it. But again, you're just going to own land, have no land, or you're going to rent. We have areas in my area that you can buy a modular and have a pad on it. The pad costs $1,000 a month. Then you have to buy the modular, which like there's limited financing options for those. And it's like after that, so I'm actually paying like $3,500, and I don't own the land. I don't own it. And if this lease ever ends, well, I have nothing.
Yeah. Yeah. It's one of those, yes, it solves an issue, but you know, people do want to own, and renting is like, okay, no, I don't think this is the answer here. Um, so we've long talked about how real estate is going through a little bit of a cleansing right now, where we've talked about some developments have kind of gone bankrupt. Some projects have either gone belly up or receivership, or another developer, bigger developer, comes and buys them out and such. Well, it's bled into the REITs now. REITs is a real estate investment trust. Think of it like a mutual fund, but for real estate, right? So this large REIT called Centurion Apartment REIT, it's a $7.9 billion private fund. It's substantially limiting investor redemptions.
Yeah.
So
And
that
we've,
means,
we've been doing that for
yeah,
like for the last little bit. And I'll let you explain like what they mean that way there, Alex.
yeah. So like a redemption means, let's say I invested 50 to 100 grand into this REIT. Well, I'm feeling a little nervous right now because I'm seeing cracks in the real estate market, and I kind of want to get out. I want my money back. And so, like, let's say Alex, you yourself, you've also invested, and let's say 8 other people invested 100 grand each. We're feeling a little nervous now. We want our money back. What they're doing is they're saying, no, you are in, and we cannot give you money back, because they don't want to see essentially a bank run. They don't want to essentially go belly
I
up.
don't want you don't want what happened in Silicon Valley when that bank collapsed. And that's and again the way that these funds, like, yes, they've taken on 7.9 billion. They don't have 7.9 billion sitting in a bank. They've been using that money to go make other money. And that's where they have borrowed debt. And so that if everyone tried to get all their money at once, it crashes the system. And that's exactly what happened with the banks is people started trying to pull money out, and then the bank had no money. And they also had to pay returns higher. And this is a normal thing for a REIT. And that's where if you need a liquid investment, you don't want to be in real estate. It's not a liquid investment. And that's where you need to be in a place of you need to hold cash if you want the money instantly.
Absolutely, absolutely. Okay, we kind of shifting gears here to some government announcements here. Mark Carney, he's recommending 5 nation building projects for approval, including an LNG expansion. Now, these 5 projects, he said, will generate 60 billion for the Canadian economy. So these first 5 projects include phase 2 of the LNG Canada in Kitimat, BC. So it will double production in LNG, which means liquefied natural gas. The Darlington nuclear project in Clarington, Ontario, which makes small modular reactors. I don't know how to pronounce this, Contresur terminal container project to expand the port of Montreal. The Michelvena Bay foreign copper mine project in Saskatchewan, and another project in BC, the Red Chris mine in northwestern BC, which mines, I believe, copper and gold.
Yeah.
Now, what's one big thing that we're missing on this announcement, Alex?
There's no fuel or oil.
Yep, no oil pipelines. So one of those biggest resources that could connect the country, and that we could, really take advantage of and do well to help our economy, not included. Why do you think that is?
Again, I mean, it's obviously, for one, I see few issues is we have Quebec not wanting to have any oil go through them. And it's starting to get down, it becomes into the indigenous bands here as well. Is like everyone wants to have something and no one wants to give up something. And this again has been the Liberals' mandate. We're not building pipelines for oil. And I mean, we're just going to push it out where and we're going to buy it at a premium from the US.
Yeah, yeah. So I mean, some of the critics, I'm hearing some of the conservative critics were saying these projects is the analogy of these projects were already underway. So I think Pierre said this is like grabbing the ball on the 1 yard line and just walking in for a touchdown and spiking it. Like this is not. This is like yes, it's good, but I'm like these are not new projects. These are already existing things are already there. So I mean, take it for what it is. I'm like, okay, well, it's better than nothing, and yeah, and
And I
such.
do. I
So
think like the LNG stuff. I think that's great and cool story is the tanks in Kitimat, all those the big ones that they built for the new one. I actually set up all the weld inspection, like the procedures, and for the testing for welders to actually do that. That's one thing I did in my past career.
sounds good. We got some more government announcements. What else is next?
I mean, it looks like we're doing a little bit of poo poo on Mark Carney here today. It seems like, but Mark Carney announces the liberal government will now go on a $5 billion spending spree to revive the economy. Now, Canada's deficit about to get much larger than we expected. And what about lower interest rates? Now, this goes in two folds. Now, Bank of Canada is meant to be separate from the government. We know that. But if someone in the government knows that, hey, interest rates are going to go lower, well, they're going to spend more money right now because we know we have to pay debt on that and we want to do it while rates are lower. And so that's where I can see them increasing it. And what was our budget? 60 billion. And I mean, are we now going to are we going to double? And that was that was our handrail budget, was it not? And now like, are we going to go 100? Are we going to go like, I don't even know I don't know where it stops.
Yeah, and then being in such huge deficit, we would be paying billions in interest, and it'll just wipe out a generation and to
Yeah, but if you
catch
go
up and
back
stuff.
when Trudeau said, "Don't worry, we're paying," with the interest is like zero, it doesn't matter. And it's like, well, that's not
Yeah.
again, this is not the problem with the government. I've always had is like, I believe it should kind of be ran like a business. It obviously not straightforward as that, but if I was to run a business and just go and take out a crazy amount of debt, hoping that rates, I would not get affected by the economy of like interest rates, the rental prices, like I would be a horrible business person. I wouldn't make any money because I would keep crashing and burning.
Yeah, I think what a lot of politicians are doing, maybe in the States as well, they're hoping to spend their way out of a recession
Yeah.
and hoping to inflate their debt to minimize it. Like like, yeah, I don't know the whole economic term, but they're hoping that inflation will minimize the debt based on the exchange and all that stuff. Um, I don't know if it's the best idea because it's historically never really ended well. But I guess,
I heard an interesting story, and I don't know if it's true whatsoever. I don't know about it, but like we know that back in the day, the Knights Templar, the church sent them out to go and modernize everyone and become power of the church. Now, the Knights Templar, everyone owed them crazy amounts of money, including like England and Rome in that time. And what they ended up doing is they actually disbanded the Knights Templar and ended up killing all of them to wash away all that debt. And then that's when the New Order came in and there was no more debt that way. And that's where someone just said, like, where does this debt go? Especially like in the US, like they're at like trillions of dollars. When do we get rid of it? Is there a plan to ever get rid of it? And that's just the economics of it is crazy.
yeah, yeah. I mean, let's finish off this one last little bit here. You know, Carney is pausing the EV mandate for 2026. So the EV standard that he was proposing before was that 20% of all auto sales being electric. Now, do you think even like at the time, 20% of auto sales, like, do we even have the infrastructure to support that in Canada?
That's the same thing as like, what wasn't Vancouver meant to be downtown only allowed to be EV? Is it by like 2030 or something? Like, don't they have a mandate that way?
Yeah, I don't know. They better change it because there's no way infrastructure. Yeah, I mean, like BC is the mildest climate in Canada, and we don't even have 20% of EV. And there is no way, even in the prairies, with the extreme weather, that EVs are going to be popular at all. I mean,
Oh,
like
it's not
just when
possible.
it's cold weather, a charge gets like it reduces a charge by like 20% minimum, right? Even as much as 30%. And there's no way like I cannot see any like a blue collar worker, giving up his, Toyota Tundra to get I don't know, a Tesla truck or something like that, or even Ford Lightning or whatever it is, because the energy degrade is huge. And then I believe the government has rolled back the EV rebates as well, right?
Oh yeah, the rebates have been taken back. When we got our EV, our one in 2020, I mean, we got like $18,000 off. Like it made sense. I'm like, I'll take this. I'll take this money and do it. And now you don't get it, and the cost of the EV is up. And it's like, well, I'm not saving any money. Obviously, yes, you could say, hey, I'm doing this for the environment. I personally don't believe that the EV is better for the environment due to all the other stuff. So that argument doesn't work for me. And that's where like I'm looking at dollars and cents.
Yeah, exactly. So, I mean, we've always long talked about, they said it's good for the environment. It's good for our environment, but not the environment that we're mining the lithium in, right? Now, I know China is, they're pioneering doing sodium ion batteries. I don't know if that technology will come over to North America, but that's one of the sustainable things. But one of those things, my wife and I would love to see is, the talk of us removing the tariffs on Chinese EVs, so that China can remove the tariffs on canola oil.
No.
And I've talked about this before, man. If you've seen on TikTok or whatever, the EVs, the BYD from China, those are amazing. They're like high end. It could put Tesla to shame, and they're only like 20 to 60 grand, something like that. And I'm like, man, if they came over here, like I'm sure our market would go up, and more infrastructure
Actually, that's
demand and
maybe
such.
I gotta go. I gotta do. I want to know what China's like, what their debt is. I like to know, like, are they in a better place? Again, like we know that Canada and the US and other countries, but yeah, I'd be interested to know what China's looks like, because I feel that they're just so further advanced of what we're doing for everything.
Yeah. I mean, as much as like, China is a communist country, and, the Western world says, oh, we're at war with China. I mean, China is, if you go visit there in some of the cities like Beijing or Shanghai, it's like a futuristic like country, like futuristic city, especially if you go to like Japan or Tokyo. It was like, wow, these things happen. And I was talking with my wife yesterday about how, like, in parts of Europe, I think it's Germany, where because they built out the infrastructure for EVs, so that the same technology of charging your cell phone wirelessly, they have that technology built into their highways. So when an EV drives on the highway, it charges the battery of the vehicle as they're driving on the highway. My wife said there is no way we'll have that kind of infrastructure in Canada. No way, because we just don't have enough population to create the case to do it.
Oh, they wouldn't even just, yeah. I mean, we can barely even upkeep a normal road nowadays, and so yeah, that's where again they're just they get stuff done so much quicker. I mean, China, they built a hospital in 2 weeks. I mean, that would take 10 years here.
Oh yeah, like during COVID, I remember they built up a temporary hospital in 48 hours.
Yeah,
Yeah,
and
they just had people working 24/7 along the clock, and like it's like
that's the same
basically
thing.
like
We go to
ants just.
we go to shipbuilding, like shipbuilding in China, like that's why BC Ferries is doing it, because the time and cost is cheaper. It takes anywhere from 5 to 10 years to build the same ship that they build there in 1 year. And that is, like you said, they just work 24/7. They just get so much stuff done. Now, is it at the best quality? Maybe not. Is it as safe? No. But again, businesses are only looking at the bottom line at that time.
Yeah, so I mean, this kind of tacks on to the reason why this whole EV standard is not going to be. It was riddled from the beginning. Is that as of Q2, the new zero emissions vehicles registration has been in major decline. I mean, Quebec has been down 38%, BC down 27%, PEI down 30%, Ontario's down like close to 19% and all the way down. So I think it's almost like the jig is up, where the idea behind EV is like the whole like kind of like the coolness factor of it is starting to wane, and the real like logistics nightmare because we don't have the infrastructure for it yet. I
Well,
mean,
even
it's
you
great in a
talk
mild
about,
climate.
like, I mean, they start like, especially in the US and Texas, I see like they have like the self-driving vehicles like for taxis and everything. I mean, I think a lot of people were so excited for that, for the EVs, that like, oh, we're not going to have to drive vehicles. I'm going to make money on mine. I mean, Tesla's been selling that idea for 10 years of, hey, you're going to buy a car and it's going to make money for you. We're so far away from that being an actual possibility that, again, it's everyone starting to be like, I'm just going to keep buying my gas car.
Yeah, I think, and I think people like a large part of us too is like range anxiety. Not, if you're on a road trip, you don't want to have to like, you know, have to sit and charge and all that stuff. But I mean, we know the day will come, but it doesn't seem like we're quite ready for it yet, especially the infrastructure that's needed, the amount of power that we need. And do we have the power to produce the need, right? Even along with the rise of AI, those AI needs power to run as well. So there's going to be more demand for power in all respects in life. So I think it's about good time to wrap it up on this episode. Any closing thoughts, Alex, or what do you got going on here?
I think that's good. I'm going to go actually do some virtual golf with my family here. And so thanks for, adjusting our schedule to go a little bit more in the morning and not into the evening like we normally do. And so, that's the plans for here today.
Awesome. Yeah, we adapt as the show. Tonight, like, weather's starting to get colder. I mean, it's starting to get dark at around almost 7:30. It's less than it's around 7:30 now. And so for us, I mentioned I play pickleball. I've shifted to moving the pickleball indoor. I'm doing late night pickleball tonight at an indoor facility. But yeah, looking forward to that. For hockey season, training camp has started. More talk about that. Football season's in the middle. So it's kind of a good time. I enjoyed summer, but this is kind of the back to regular life and back to our sports, back to life, and back to school for the kids, and back talking about real estate and housing. So, folks, thanks for tuning in. On behalf of Alex Shanks, I'm Alex Pang. You've been listening to the Canadian Mortgage Show. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.